Consumer confidence in the housing market is decreasing. Inflation is definitely not transitory, and it is also increasing. Plus, interest rates have dropped a little bit since the spike earlier this year. It is Taco Tuesday, my favorite holiday of the week, and you won't want to miss this information-packed video, so grab a shell and let's fill it up. According to a recent survey, the Fannie Mae Home Purchase Sentiment Index, or HPSI for you viewers who love acronyms, the HPSI decreased 2 points in July to 62.8, its lowest level since 2011 and well below the all-time high set in 2019. Surveyed consumers said that they expressed pessimism about home buying conditions, with only 17% of respondents reporting it's a good time to buy a home. Meanwhile, the percentage of consumers believing it is a good time to sell has begun ticking downward in recent months, falling from 76% in May to 67% in July. So what is going on in the housing market to change the minds of consumers? Well, an increase in interest rates is a start, but what else is happening behind the scenes that is influencing potential home buyers? Answers to these questions and more starting right now. Hello and welcome to Ask the Lender. My name is Rod Ferrier. I am a licensed loan originator as well as a U.S. Navy veteran. My objective is to help you stay informed of housing market trends as well as educate others on little-known strategies to growing wealth and paying less money in taxes. Given what the Democrats are doing, you're going to want that information. So if you or someone you know are in the market to buy or sell a home, please make sure to reach out to me. And if you don't mind, help this channel out by subscribing, clicking that bell right there to get notified, and sharing this information with others who you feel can benefit. Also, make sure to stick around to the end where I break down the 6 components of the Home Purchase Sentiment Index and why this data is important to those looking to buy or sell a home here in 2022. Now, it is no secret that the Biden administration and the Fed appear to have zero clue on how to run an economy. According to the news, paying more for gas and groceries is now a good thing. And according to the White House, every bad thing is Putin's fault. In the housing market survey, though, Russia was not to blame for the consumers feeling worse about buying a house. What was an insane housing market that favored sellers has now returned to somewhat normal, and more inventory and longer time on the market for homes now favor the buyers. According to recent data, though, consumers have become less happy about buying a home in 2022. Overall, 4 of the Home Purchase Sentiment Index's 6 components decreased month over month, including the component associated with home price growth expectations, which has fallen meaningfully over the past few months, but remains positive on net. Something to pay attention to, though, is year over year. The full index is down 13 points. The HPSI has declined steadily for much of the year as higher mortgage rates continue to take a toll on housing affordability. Higher mortgage rates are a top reason behind the growth perception that it's a bad time to buy as well as sell, according to this report. Additionally, consumers appear to be indicating that selling conditions are softening as the good time to sell component has declined meaningfully over the past 2 months. And on net, fewer consumers expect home prices to go up. So with home price growth slowing and projected to slow further, I believe consumer reaction to current housing conditions is likely to be increasingly mixed. You see, some homeowners may opt to list their home sooner to take advantage of a perceived high prices. They think they're going to make more money now. And while some potential home buyers may choose to postpone their purchase decision, they believe that home prices may drop. Overall, this month's HPSI results appear to confirm my earlier forecast for moderating home sales over the coming year. So what exactly is the Home Purchase Sentiment Index, and why should this information matter to you? The Home Purchase Sentiment Index, or HPSI, distills information about consumers' home purchase sentiment from Fannie Mae's National Housing Survey. Now, they do this by putting it into a single number. And the HPSI reflects consumers' current views and their forward-looking expectations of the housing market conditions. Now, the HPSI is made from answers to 6 national housing survey questions that solicit consumers' evaluation of housing market conditions and address topics that are related to their home purchase decisions. The questions ask consumers whether they think that it is a good time or a bad time to buy or sell a house, what direction they expect home prices and mortgage interest rates to move, how concerned they are about losing their jobs, and whether their incomes are higher than they were a year earlier. Fannie Mae's National Housing Survey is the most detailed consumer attitudinal survey of its kind. Approximately 1,000 respondents are polled by live telephone interview to assess their attitudes towards owning and renting a home, home and rental price changes, homeownership distress, the economy, household finances, and overall consumer confidence. Homeowners and renters are asked more than 100 questions used to track their attitude and the shifts in it. So 6 of these questions are used to construct the HPSI. Now, these findings are compared with the same survey conducted monthly beginning June 2010. Fannie Mae conducts this survey and shares monthly and quarterly results. And my team and I go through it and share this information with our referral partners, past clients, and prospective buyers to keep you informed. The July 2022 National Housing Survey was conducted between July 1st of this year and July 21st. And most of the data collection occurred during the first 2 weeks of this period. Now that you know what the report is, you can see that the data shared can be very useful in determining how you can approach the housing market. So let's break down these 6 categories so you can see how this data may help you or someone you know. Remember at the beginning, I shared that the Fannie Mae's, that their HPSI decreased in July by 2 points to 62.8. Well, the HPSI is also down 13 points compared to the same time last year. The first category that we are going to discuss is the good or bad time to buy. The percentage of respondents who say it is a good time to buy a home decreased from 20% to 17%, while the percentage who say it is a bad time to buy increased from 75 to 76%. As a result, the net share of those who say it is a good time to buy decreased 4 percentage points month over month. The second category is good time or bad time to sell. The percentage of respondents who say it is a good time to sell a home decreased from 68 to 67%, while the percentage who say it is a bad time to sell increased from 26 to 27%. And as a result, the net share of those who say it is a good time to sell decreased 2 points month over month. The third category is home price expectations. And the percentage of respondents who say home prices will go up in the next 12 months decreased from 44 to 39%, while the percentage who say home prices will go down increased from 27 to 30%. The share who think that home price will stay the same increased from 23 to 26%, and as a result, the net share of Americans who say home prices will go up decreased 8 percentage points month over month. Now, the fourth category is mortgage rate expectations. And the percentage of respondents who say mortgage rates will go down in the next 12 months increased from 5 to 6%, while the percentage who expect mortgage rates to go up remained unchanged at 67%. The share who think mortgage rates will stay the same remained unchanged at 21%, and as a result, the net share of Americans who say mortgage rates will go down over the next 12 months increased 1 point month over month. The fifth category that we're going to talk about is job loss concern. And the percentage of respondents who say they are not concerned about losing their job in the next 12 months remained unchanged at 78%, while the percentage who say they are concerned increased from 21 to 22%. As a result, the net share of Americans who say they are not concerned about losing their job decreased 1 percentage point month over month. Now, the final and sixth category is household income. The percentage of respondents who say their household income is significantly higher than it was 12 months ago decreased from 25% to 24%, while the percentage who say their household income is significantly lower decreased from 16% to 13%. The percentage who say their household income is about the same increased from 58 to 61%. So as a result, the net share of those who say their household income is significantly higher than it was 12 months ago increased 2 points month over month. So to sum it all up, Americans are paying more in living expenses. Most people are concerned about the economy, and as a result, potential home buyers are cautious. Potential sellers see the slowdown, and some are deciding to take action now versus waiting to sell. What are your thoughts? What do you think will happen to the housing market this year? Do me a favor in the community and share your thoughts in the comments below. A friendly reminder to subscribe to this channel. That way you can stay informed of housing and financial market news, as well as little known strategies to building wealth and paying less money in taxes. Make sure to check out the upcoming video to learn the 5 recession indicators that you need to be looking for. And we'll see you next time on Ask the Lender.